Hey, good morning, everybody. It's Mike. I'm a little bit late this morning. I apologize, but thanks for waiting for me. Hey, yesterday we started a conversation that I kind of want to continue today, and it was about being boring, or the word that I like to use for it in our business is trite. You might, how many times did your high school English teacher use that word with you? Webster's dictionary defines the word trite as boring from much use, not fresh or original. Yep, that's us, the whole industry. Hey, look at my new listing. Look at the picture of my home buyers, for some reason, standing there holding a picture frame at closing. Look at my video that I'm making in my car. Why do we do that? All these things are trite. They're boring. They're overused. And what I want us to focus on is ways that we could differentiate ourselves. And remember, yesterday we talked about the 95-5 rule, right? Only 5% of the population is even going to consider a move this year. So that means, by definition, that 95% of the people that get whatever marketing message you put together today are disinterested. I'm not moving. I'm content where I'm at. For whatever reasons or objections I might have, I'm not interested in buying or selling a home this year. And I might have some very valid reasons why I'm not. So you, Mr. or Mrs. Real Estate Agent, your message to me is irrelevant. What I want us to do is to flip that around so that we're not just marketing to 5% of the population. Why don't we market to everybody? And you might say, Mike, how could I do that? And I would say, that's what I'm here this morning for. If my message is just to people that want to buy or sell a home this year, then I am going to reach a very limited audience. And that means that my business is going to be limited. But what if my message was more about diversifying your portfolio? Let me ask you, as a participant on the call with me this morning, do you think it's a good idea that everybody has all their money in Wall Street? Well, of course not. Wall Street's a fixed casino game, right? Don't you want to diversify your savings, your investments? Do you want them all in stocks and bonds? Or would you like a little bit in real estate, a little bit in stocks and bonds, maybe a little bit in cash, maybe a little bit in municipals? This is called diversifying a portfolio. Now, that message is applicable to everybody. So what I'm saying to you this week is, why do we just try to get people to buy or sell a primary residence? Why don't we shift our message and start explaining the benefits of becoming a landlord? I had some defined talking points that I wanted to share with you today, but I got so much inquiry yesterday for my reference of the 10-10-10 rule that I thought I would explain that this morning, because I got dozens of emails from people saying, explain what you mean by the 10-10-10 rule. Well, this is something I came across a long time ago, and you'll see how long ago it was when I give you the definition of the 10-10-10 rule. But it helps people understand being a landlord and some key fundamental principles. So some of the objections that you're going to hear when you start talking to people about buying investment real estate is, it's too much time and too much trouble. I don't have the money. The prices, I think prices are going to come down in the future. Evictions, moratoriums on evictions, what if I get a bad tenant? All these things just go to under the general category of, it's just a big hassle. I can buy stocks and bonds and I can forget about them. I just open my statements when they come, but I don't have to actively manage them. And I say, well, all that might be true if you don't follow the 10-10-10 rule. Use this in your conversations or your marketing message with people and watch the response you get. Watch the body language when you say, well, that could be true if you don't follow the 10-10-10 rule. They will almost 100% of the time say just what you said yesterday. Well, what's that? And I say, well, the 10-10-10 rule is an old principle. I've been using it for decades, and it works like this. The first 10, keep your interest rate under 10%. Well, see how old the principle is? Keep your interest rate under 10%. Well, that's not hard. It would be hard to get your interest rate over 10% these days, right? Okay. The second 10, keep 10% of your own money or less into the property. This is a broad guideline. They might decide that they need to invest a little bit more than that, but the guiding principle is keep as little of your own cash into real estate as you possibly can. That's the advantage of real estate. If I want to buy a $100,000 house, I don't need $100,000. I might only need 10%, maybe $15,000, right? But if I want to buy $100,000 worth of stock, I have to have $100,000. So leverage is the key part to owning investment real estate. The value of leverage. You don't have to actually use your own money. You can use other people's money and allow your tenant to pay it off for you. Isn't that beautiful? The third 10, the key part, and this is exactly what I say to everybody that I'm speaking to about this. The third 10 is the most important. If you violate this, you will hate life. I will guarantee you. The third 10 is keep the property within 10 miles of where you live. It's a key component. I have violated that rule personally myself, and I've learned to live to regret it. I bought a house I still remember this day, on the other side of Atlanta, about an hour from where I live. And I can remember walking out of closing thinking, how smart am I? This is a great deal. I got to be the smartest real estate guy on the planet. All the way home, I'm thinking how smart I am, right? How this is going to be a great deal. I hated that house. I hated that house with a passion that I can't describe to you, and I couldn't sell it and get out from under it quickly enough. And here's why. Because every time it became vacant and every time a prospective tenant wanted to see it, I had to haul my cookies clear across Atlanta. And of course they don't show up, or they're horrible tenant prospects, right? So what do? After a while, I get tired of driving clear across Atlanta to do this, so I just put the next best tenant that comes along in there, and then the circus really begins, right? So because of my impatience, my laziness, my impracticability, buying a property that far away from me, the hassle factor was huge. I put a bad tenant in there, and then the circus begins. If I had bought the property within 10 miles of where I live, it wouldn't have been such a big deal. It wouldn't have taken me an hour each way to deal with any issue that comes up. I could do it very easily within the realm of my life, right? It wouldn't have been such, and because of that, I would have been more patient with putting the right tenant in the property. Don't violate the 10-10-10 rule, but if you adhere to it, owning investment real estate, it's a great investment. You get a tenant to pay off your debt on the property. You get to depreciate the property on your tax returns while it's appreciating in market value. What? You don't get to do that with stocks. It's a great... Now, I'm just going to interrupt myself for a second because I want you to see something. Is that a talking point, a marketing point different than the one you're making? Because my message is applicable to the entire population. Is yours? And instead of trying to get people to move their primary residence this year, could you get them to buy now look, keep people calm down. You're not talking about going out and buying 10 or 20 properties, but if you just bought one, maybe two a year, but if you just bought one property a year for the next 10 years, you would have 10 properties. See how smart I am? 10 properties at the end of 10 years. And they would all be in the process of being paid off by your tenants. And if you will put the money that you make off the property back into the property and not keep profit for yourself, in 20 years you've got 10 paid off properties. There's your retirement program right there. Now, are those talking points that you could take and put into action today? And would that be applicable, more relevant to a larger swath of the population? Of course it would. Of course it would. Now, you're going to have to deal with other objections like, well, why would I want to buy an investment property if I think we're in a bubble and prices are going to come down? And my answer to that 100% of the time is, what do you care about sales price? We're not buying and flipping. This isn't a short-term strategy. This is a long-term strategy. What do you care about sales price? Well, and they will always say the same thing. Well, I mean, deals are made when you buy the property. I'm like, no, if you're buying and flipping, maybe. But on this, you're going long on your investments. All that should matter to you is cash flow. Do you make in rental income more money off the property than the property costs you each month? If you do, then it's a good purchase. Well, prices might come down next year. I don't know. They might not, but it doesn't matter to you because you're not going to sell the property next year. You're not going to sell the property in 10 years. You're not going to sell the property in 15 years. So what do you care? All you care about is monthly cash flow. That's how you win this game. And that, my friends, is how we go out there and we make it happen for ourselves today.